You've heard it all before. Term is cheap, whole life is safe, coverage is all that matters. But here's the uncomfortable truth. Most life insurance policies, they expire worthless or quietly drain your cash value while the IRS waits for its cut. Meanwhile, the wealthy and even banks use a strategy almost no one sees structured the right way. And if you get this wrong, the IRS won't pay the price. Your family will. In the next 7 minutes, you'll discover why 98% of term life policies never pay out and how the cheapest coverage could become the most expensive mistake your family ever inherits. The real reason whole life is still pushed on high earners and how its guarantees can quietly suffocate your cash value, flexibility, and legacy, and how a properly structured IUL, the same strategy used by wealthy families and Fortune 500 executives, can grow tax-free income, shield against market losses, and transfer generational wealth with zero to the IRS. If you ever ask which life insurance policy actually builds wealth, this is the breakdown the industry doesn't want you to see. By the end, you'll know which policy truly protects your legacy and which ones only pretend to. There is a reason you've never heard Section 7702 mentioned on the evening news. Because buried inside that IRS code is a strategy the wealthy have quietly used for decades to grow their money tax-free, avoid capital gain taxes, skip required minimum distributions, and pass on millions with zero income tax. And yet, most professionals have never even heard of it. Or worse, we're told it's just life insurance. Hello, my name is Robert Balgach. I'm the founder and CEO of Black Swan Insurance Group. And since 2017, we have helped over 20,000 families design bulletproof, tax-free retirement strategies using Index Universal Life, IUL, properly structured, fully compliant, and backed by hundreds of five-star reviews. And this isn't just theory. This is the strategy banks use, CEOs use, the people who keep what they earn use. And by the end of this video, you'll understand exactly how it works and whether it belongs in your plan too. So term life insurance is the default for most professionals. It's cheap, simple, and offers peace of mind. Until it doesn't. And here's what they don't tell you. Over 98% of term policies never pay a debt. 98%. They expire worthless. And the only winner? The insurance company. And think about it. You could pay premiums for 20 or 30 years and walk away with nothing. No refund, cash value, no legacy. It's like renting your financial protection, and when the lease ends, so does your coverage. And your family, they're left exposed. And here's the kicker. That expiration often hits right when you retire, just as your need for protection, liquidity, and tax strategy goes way up. No cash, no coverage, no retirement plan. That's not wealth protection. That's a financial roulette. So if term insurance isn't built to protect your legacy long-term, what about whole life? Let's talk about that next. Whole life insurance is sold as stable, guaranteed, safe, but here's what most high-income professionals don't hear. It's painfully slow, inflexible, and expensive. Premiums are often 5 to 10 times higher than the term for the same death benefit. And your cash value starts at zero. For the first 2 or 3 years, you're just paying to stay in the game. No growth, no liquidity, no momentum. Even after that, you might earn 3 to 5% if dividends hold up. But that's before inflation and before factoring in the opportunity cost of your capital. It's like driving a bulletproof tank through a school zone. You'll get there, but slowly, expensively, and with no ability to turn. Want to change your premium? Adjust your strategy? Access your cash without jumping through hoops? Good luck. Whole life wasn't built for agility. It was built for absolute certainty. And certainty comes at a cost. Now, if you're ultra conservative, want fixed returns, and don't care about liquidity, that's fine. But if you're a growth-focused professional earning $150,000, $300,000, $500,000 a year, you're locking away opportunity in a contract that's allergic to growth. Now, if you have one, don't cancel it blindly. But don't assume whole life is the smartest place for your next dollar either, because a better designed policy can give you both safety and tax-free growth. And that's exactly what Index Universal Life, IUL, when structured right, was built to do. By the way, if you're curious how this strategy would work for your numbers, your income, your age, your goals, we built something powerful for you. It's called IUL Custom GPT. It's a free AI-powered assistant that shows you how a properly structured policy could perform for you. No phone call, no sales pitch, just instant customized insight based on your inputs. You can try it anytime during or after this video, and the link is in the description below. If term insurance is temporary and whole life is sluggish, then Index Universal Life, IUL, is the wealth building engine most professionals were never shown on purpose, because this one isn't really about death insurance. It's about living, breathing asset class that wealthy have used for decades to protect capital, sidestep taxes, and create their own private retirement bank. Here's how it works. You fund an IUL either through annual contributions or monthly premiums, and the cash value is linked to the market, often the S&P 500 index, but your money isn't invested in the market. And that distinction is critical. Instead, the insurance company uses index-linked crediting based on two key rules: upside potential, up to a cap, typically around 10 to 12%, and downside protection with a 0% floor, meaning if the market crashes, your gains lock in and your account doesn't go backward. It's like riding a secure elevator. Your gains take the express up, but when a crash hits, your account hits the emergency brake and stay put. And here's where it beats traditional investing cold: tax treatment. Under the IRS Code 7702, your cash value grows tax deferred, and you can access it through tax-free loans. No income limits, no age restrictions, no forced withdrawals, no IRS handshake. It's a private, tax-free vault, growing your wealth, shielding it from crashes, and passing a seven-figure legacy to your family, completely outside the reach of Wall Street or the taxman. It's the one strategy that lets high earners say, I'm done overpaying the IRS. I'm done riding market chaos. I'm building wealth on my own terms. Take Dr. Sarah, a 42-year-old physician earning around $250,000 a year. She had a $2 million term life policy and a fully maxed out 401k she barely trusted. After restructuring her monthly contribution into a max funded IUL, she eliminated $1.2 million in lifetime tax exposure and created a tax-free retirement income stream her CPA hadn't even considered. But here's the part nobody tells you. Owning an IUL isn't the strategy. How you fund it is. Top 1% don't treat it just like any other life insurance policy. They treat it like a private bank, and they fund it like one. It's called max funding. You inject the maximum premium allowed by law right up to the IRS limit without triggering a modified endowment contract, also known as MEC. And that single move, it changes everything. You shrink the insurance cost, you accelerate the cash growth, and you unlock tax-free income potential most people never even know exists. It's like turning a basic life insurance policy into a high-performance financial engine, one that builds wealth faster, protects it better, and pays you tax-free in retirement. Here's an example. Let's say you are a 50-year-old in decent health, and you max fund your IUL with $50,000 a year for the next 15 years. With a properly structured IUL, that could create $1 million in tax-free capital by age 65 and still pass a seven-figure death benefit to your heirs. In addition, this puts you in a position to have $87,000 in tax-free income per year for the rest of your life. And because it's not a qualified plan, there are no contribution caps, no income restrictions, no required minimum distributions, no IRS string attached. That's why we call it a tax-free wealth protector. When structured properly, it's not just a policy, it's a private retirement machine. So let's bring this full circle, because the real question isn't which policy is the best. The question is, what problem are you solving for? Term life insurance is pure defense. It's low cost, short-term coverage, ideal if you're young, just starting out, and need to protect your income on a tight budget. Whole life leans into stability. Fixed premium, modest growth, long-term guarantees. It's best for conservative savers who prioritize predictability over performance. But for high-income professionals, those earning $150,000, $300,000, or even $500,000 plus, who want to reduce tax exposure, grow wealth without market risk, and leave a legacy without handcuffing their capital, that's where a properly structured IUL strategy becomes a category of one. At the end, it's not about replacing one with another. It's about designing a strategy that aligns with your life stage, income profile, and long-term vision. Because when you structure life insurance like the wealthy do, not for debt, but for tax-free income, liquidity, and multi-generational asset protection, it stops being insurance and becomes the most powerful financial instrument in your retirement arsenal. Let's quickly recap what you just discovered. Why term insurance is built to expire, and why that leaves most families with nothing but regret. Why whole life may protect you, but rarely performs, especially for high-income earners who still need real growth, not slow guarantees. And how properly structured, max-funded IUL, compliant with the IRS Code 7702, can unlock tax-free growth, downside protection, liquid retirement income, and a lasting legacy your family keeps, not the IRS. So if you're a high-earning professional and want to see exactly how this strategy could work for you based on your income, age, or retirement goals, you can schedule your free tax-free wealth strategy session with our team today. The earlier you start, the more leverage this strategy gives you. And one decision today could protect decades of future wealth. In this session, we'll reverse engineer your ideal life outcome, whether that's a tax-free income, legacy planning, or asset protection, and we'll show you how to legally keep more of what you've earned. Still wondering how this fits into your big picture? Well, in our next video, the tax-free retirement blueprint, how high earners retire 100% tax-free, we'll show you the full strategy. You'll see step-by-steps how professionals earning $150,000 plus can legally achieve a 0% tax rate in retirement, and why the wealthiest families never rely on 401ks or IRAs alone. We'll break down how strategies like Index Universal Life stack up against traditional plans and how to protect your savings from future tax hikes and market downturns. No hype, just proven IRS-compliant methods that puts you back in control. You can click now on the link below to watch and get your blueprint. Because at the end of the day, it's not what you earn, it's what you keep. Enjoy the ride.